The endeavor of every investor is to identify multi-bagger ideas where his wealth can multiply. Whereas it is difficult to identify 100x ideas, it is certainly not impossible. Some of these great companies and great businesses, they touch our daily life. It is just that we are not able to relate to them. So what is the art of identifying 100x? What should be the template? What about basic assumptions? So on this edition of Market Makers, I have with me a special guest, or I would say a perfect guest, who will discuss the art of identifying 100x ideas. Raamdeo Agrawal of Motilal Oswal Financial Services. Great to have you back on the show, sir. Thank you for joining us.
Pleasure.
If I look at the history of Indian stock markets, in last 30 years, the Sensex has been 100x.
100x,
but
yes.
not too many investors in India can boast of 100x stocks. So if Sensex has done so well, how come individual investors have done so poorly?
Yeah, even I don't have many 100x ideas, though I'm investing for last 35 years. So what happens is, I have just about one, just to keep the record straight. So what happens is that you come to the stock market, you're always worried that the profit is temporary and it might go away. So you buy nicely. You have that vision, that you have that vision to see what is required in a stock market to make money. You got to have that vision because you're buying the future. You got to have vision to see the future. You have to have courage to buy those wonderful businesses and hold them, patience, which is the most difficult, because when the luck strikes and the stocks work, they just go up. And when it goes up, as it is said, you cannot go, you cannot lose anything if you book profits. So people keep on booking profits, and they keep on embracing the losses. So what happens is, at the end of it, you have portfolios where all the profits are booked in early stage, in 2 years, 3 years or 4 years, and all the losses have been kept for 15, 20, 30 years. If you can reverse the process, where you allow a profit-making company, nice company, where you have vision to see they're going to become very large for 15, 20 years, you have the most likely opportunity of making 100 baggers. If the dumb market can do 17, 18%, finding an idea which is going to do 5, 6, 7% higher, I think you have done the job. So there are a lot of companies which have done 100x from those humble beginning. If when you see the valuation, like ITC was available for some 120 crores in 1988.
Is it true?
Yeah, today it is 2.5, 3 lakh crores. So, and they have given 25,000 crores, I think they have earned 25, 30,000 crores profit. They have paid out 15, 20,000 crores worth of dividend. And today again you can sell it for 2.5 lakh crores. And it is the best performing stock on 25-year basis. So there are stocks, and ITC was not an unknown stock even in 1988. It was #1 tobacco company then also, and highly profitable. Of course, they was at that point of time suffering from the excise issues, and that's how the stock was depressed. But you got to have that vision that it is a monopoly, cigarette is going to go nowhere, and these guys are going to survive and prosper. So that vision part is one thing which doesn't come that often to everybody, but vision is still there with the people. People do buy the stocks, and they have the courage to buy. What they don't have is the patience, enough patience. Even I should also be blamed for not having enough patience in the past, but it's a matter of learning,
But nothing is permanent in today's dynamic world.
Yeah,
if I look at the definition of blue chip, the blue chips within the Sensex are already out. I can talk about endless companies which were the blue chips of 1990s. Right now, they are part of dustbins of the financial history.
Yes.
So how can one really take a 10-year or a 15-year bet?
Yeah. So that's where I think, again, it comes to finding young companies, and when they are little unknown. See, look at Infosys. I think mother of all the growth story in India is Infosys. In 1993, when it got listed, I think the public issue was, actually I checked the facts 3 times. Because the facts are, when it is 4,000 times, literally you have paid nothing.
Yes.
And at 31.5 crores is the total capitalization at which the IPO came. It got listed. The first time it started on the board, it started trading at about 50 crores. Today it is 2 lakh crores with annual profit of 12, 13,000 crores, 25, 30,000 crores in the bank. And so I think this is so it's a massive growth story. So this country is a growth country, and businesses underlying here. And we are talking about, we have a government which is right of the right. So we are going to see, if you want to do ease of business, you are going to see flourishing of a lot of businesses very rapidly. That's how you make it 8-9% compounded from 2 trillion to 4 trillion very quickly. So we are going to see a lot of businesses coming up, and they will be of all the sizes. So what is required is good business when it was at early stage, because every company starts small. Yes. The beginning is always humble. You start at 200-300 crores turnover, 40-50 crores profit, and then suddenly you start shooting the cost of capital. If the cost of capital is 12, 13, 14%, you start earning 20%. And that is a point of time you are not that much known. And at that point of time, from the electronic database, we start seeing who are the companies which are crossing this criteria of 15-20%. And we get 25-30 companies at a given point of time. The real problem is not spotting them. The issue is out of 30 or 35 or 40 companies, how do you figure out that 1 or 2 companies which are going to make it big? And that's where the little bit of frameworks. How do you clean them up? I mean, does it have a fantastic parent? Does it have some technology? Does it have, is it coming from a very large profit pool kind of situation? Is it coming from a massive value migration? You know, what is happening is the businesses are not staying at one place. So values, they keep shifting. So say generic business, so generic pharma business. It's a very large business, very profitable business in Europe and America. Now from there, that business is being shifted to India. Now the cost of production for these generics is fraction to what it is in US and
India
all.
has inherent
India
advantage.
has inherent advantage. We have the chemistry, we have pharmacology, everything.
We have the talent.
And we have the talent and we have the quality. Yet the price at which these talents are available is very cheap. So when you are able to make a tablet, or even a paracetamol tablet at 1 cent, you can sell it for 3 or 4 cents. The margins are quite massive, and the opportunity size is very big. So I mean, all these companies, they also start very small. I mean, 300 crores turnover, 30 crores profit, 40 crores profit. If you can catch them, go and meet the management and figure out what kind of vision this management has and what kind of competition it has. Does it have a growth plan of running at 30-40% for next 10-15 years? And that's your call finally.
So one should catch them young. But
Catch
if
them young and bit of unknownness. You have to move ahead of the crowd. If it is a small company, it is massively popular. See, a 100 crore company trading for 10,000 crores, then you lost the advantage.
Like e-commerce, small companies,
Yeah, I mean,
and
the
they are
companies are,
massively
in fact, the
popular.
companies are not there. Barely names are there. They have some turnover, and they hate to talk about profitability, and yet the valuations are running into billions. So at least I don't understand. I think some of them will definitely make money, but I don't know which one. So I would not put my bet till I understand this company is going to make money. Rules of the game is yet to be firmed up, at least in Indian context. Nobody is making money. But at some point of time, you see emergence of few online companies also making a lot of money. Because then online companies have an opportunity, not only in India, they can take the model to global. So suddenly you'll find emergence of few globally competitive some services or product company which will come out of India, and yet you can buy it for a few thousand crores or a few hundred crores.
I want to discuss the importance of price, and for someone who spent reasonable time in the market, clearly would vote that a company like Asian Paints or a Nestle, HUL, Aisha, they are great companies.
Yeah.
But at the current juncture, some of these stocks are ridiculously priced.
Yeah.
Does it make sense to buy a great business at a high price?
Yeah, so that's a kind of a confusion right now because quality business run by quality management, and which has a growth today, and growth is longevity growth is visible, but valuations are crazy. So you have to find, there is a fight between quality and growth. Where there is a quality and there is no growth and still you are paying very high price, you must say no to that very clearly.
So what falls in that category?
So, say like Bata or some of these FMCG companies, they are growing at about 10-12%. At least that's what has been the track record, maybe even lower. But the P multiples are 40-50. So they are, I don't think either the growth must clearly, somebody is paying for the growth. So either growth must immediately come back. In next 5-10 years, they start growing at 20-25%. Obviously, then the price is justified. But if by chance the growth doesn't come, in that case, either you will have a very mediocre return, if at all, or you might actually lose some money. You may not get cleaned up because they are very great franchises. So it has a franchise value, but it doesn't have a growth value. So there's a lot of confusion between quality and growth. What you need to make money in these kind of companies is not only quality, but also growth. The moment growth is there, and growth can be of a various order. I mean, the companies, some of the companies have 15 to 17%, 20%, and some of the companies like Page and iShare and all, they have a much higher rate of growth. So valuation of growth, see, when quality of business is very high, when the return on equity is running at about 30, 35% or upwards of that, 60%, 70%, and growth is also 25%. Then the third element, longevity for 10, 15 years, then the valuation becomes quite nasty. And that's why you see these companies, they have become 100 times in 5 years.
That explains why an HDFC Bank
Yeah,
has always
HDFC
traded
Bank.
at a premium, because growth has been solid and
Yeah.
market share gain has been robust.
So one should not focus only on growth. First, you should start with the Q.
Okay.
Quality of business and quality of management. And it has to be in the same order. First, you must look at quality of business. See, people do valuation without looking at values. And the process of looking at values is business, management, growth, longevity of growth. When you have circled all four, then you have understanding of what is the value. And let's go and look at the quotation. But people start with the quotation and then look at the value. That's where the problem comes.
Your study talks about value migration.
Yeah.
And value migration, typically, just for the benefit of our viewers, is mega trends. How private banking has taken over PSU banking,
Yeah.
how landline has moved into mobile telephony, how brick and mortar would move into e-commerce. So where are the mega trends in the country?
Yeah, so mega trends are there all across, but as far as the stock market is concerned, where you can make money out of it, say like the retail shopping is going to online, but is there somewhere you can make money? So we are talking about money making mega trends. Okay, so the generics, move of the generics, the global generics moving from Europe and America to India is still on. It's a big thing. I mean, still we are just about $10, $12 billion, probably it could be $100 billion story. So there's a lot of story ahead, and maybe the Sun Pharma is the leader, but there are many more Sun in the making. They could be 300 crores company, 500 crores company. So you have to spot those new entrepreneurs who are going to come up in that particular field. So there is a massive, massive opportunity. There are a lot of markets like European markets and Japanese market. We have not even started. Even in America, a lot of segments are not being tackled. So the opportunity to penetrate these market segments, most sophisticated segments, is very, very large. And Indian cost and global value or American value. So this particular segment is there. IT story is big, but my sense is only half the story has happened, and more than half the story is yet to happen in the
So
tech
can a
field.
TCS or Infosys even grow now?
Yes, it is growing. It is growing. If anything is growing in the tech field, it is those large companies
But
which
it
are
cannot
growing.
be at 100x.
No, it cannot be 100. This is definitely not a 100x story. Okay. It is definitely not, because 100 is, first thing is, it has to be small and relatively unknown. See, the idea is not about 100 per se.
Okay.
It is about mega, multi-baggers. So if something does 70 times, it is still 100 bagger.
Yes.
What I'm saying is that you put a small amount of money, you put 1 crore, and you get 50, 60 crores in next 10, 12 years. What more you want?
That's tax free?
Yeah, it's tax free, and it's a huge accumulation of purchasing power.
Compounding.
See, what is investing? Investing is about accumulating purchasing powers.
You're able to beat inflation.
Yeah, you should be able to beat inflation and make some money so that you can change quality of your life. Everybody saves limited amount of money. But if you are able to use that money to buy more purchasing power than what you are surrendering today, I think you will retire very well. That's the whole idea.
So let's talk about your mutual funds. The portfolios are out in the public, so we have the liberty of discussing them.
Yeah.
United Spirits, one of your key holdings there.
Yeah.
Some would argue United Spirits?
Yeah.
Why?
Why? So, I think we have SEBI constraint in terms of what we can recommend and all, but since it is part of a public portfolio, I think, and it's a large company, and the holding is disclosed in the portfolios. So, I mean, the way I look at it, I mean, it's about the future. What we buy is the future. What I look at is, see, it's a country of very large population, and drinking habits are very hard here among the people who can afford, and yet the consumption levels are very low, and unorganized market is very big. But in the organized branded liquor market, there are only two major players. One is the USL, another is Pernod. Now this market is a brown spirits market predominantly. I don't drink, so I don't know the difference between brown and white, but
But you know about the habits.
yeah. So this is probably world's biggest brown spirits market, and in that, Diageo is the king, worldwide king. So I think we have a situation, competitive situation where opportunity size is very large, and players are only two. So it's almost monopolistic, as monopolistic as Bosch or something, and it is very branded thing.
So United Spirits has all the makings of a great business.
Great business. It has a great business opportunity, because competitive situation is quite crazy. I mean, you cannot enter that easily. Okay, you cannot create a black label or red label overnight. It requires a lot, and there's a lot of restriction on advertising and all. So they have the business, they have the distribution, and they have all the brands. So and they have the global technology of how do you milk the customer. So they are going to premiumize. I mean, they will make you pay almost double in next 5-10 years.
They have the pricing power.
They have the pricing
and they
power.
Have the brand,
no, they have
which
the
is very
technology.
important.
See, more than brands have come actually from USL.
Yes.
But they have the competence to use the brands effectively in a marketplace. So they have the marketing prowess. That's how they are Diageo. So a terrific business opportunity has met with the terrific management. And it has a longevity growth opportunity in terms of volume, in terms of price. So all these three mix is very difficult to figure out in terms of, then you go to the valuation. So now there's a lot of wishful thinking that these things are going to happen.
Yes, yes.
I mean, fortunately.
That's the vision.
Yeah, so that's the vision part of it. Now, I say you buy, say, half or 50-60% today and wait for things to happen. I have bought whatever I wanted to buy. And because in investing, what is important is not how much you make. What is important is how much you will lose. So when we started buying at 23,000-24,000, it was available at about 3 times sales.
Market cap was about
sales.
30,000 crores.
Yes, 30,000 crores. It was available at 3 times of its net sales and only 1.5 times of their gross sales. I said, this is not a bad price. Now, there is no, I mean, profits were not there on the ground because of these adjustments and all. So I said, okay, we'll see. I mean, when the profits come, people will start shifting the valuation parameters from price to sales to price to earnings.
So that's where your framework comes in, and that's
Yeah.
SQGLP.
Yeah.
Size is good, quality is good, growth is there, longevity is there,
Yeah.
and price is also
Yeah.
affordable.
So price is, I mean, to my understanding, it is not overpriced.
Okay.
So, and hence, and I have a lot of patience.
Okay. Patience is the most
Yeah,
important.
because my
key.
purchase price is 23,400, my downside was very limited. So I would sit for next 10 years to figure out what happens to these companies.
Okay, the interesting idea in a declared portfolio, this public information, is HPCL. And typically that's not Raamdeo Agrawal style of investment.
Yeah. So public sector we have been avoiding, but again there's a very unique opportunity here. It's the largest business in India, about 10 lakh crores. I mean, this entire fuel retailing, and it's a monopolistic in the sense that BP, HP, IOC.
Reliance is coming now.
Yeah, Reliance is coming. So value migration will happen.
Okay.
One of the biggest value migration in making is the Reliance getting into petrol diesel retailing in big way. In the sense
So the
that
dynamics will change.
Dynamics will change. It will be competitive to the rest of the three, and Reliance has the biggest opportunity to get 1 lakh, 2 lakh, 3 lakh crores worth of business, because they have the refinery. One, they can set up some other thing. But I think this is going to be one of the largest value migration story we will watch in next 5-6 years. If government doesn't disturb the the promise of big control. I mean, if they remain they keep the fuel retailing completely in the public and free and fair, I think Reliance will take this opportunity, and they are known for execution. So I'm quite sure that they'll make it very big and very profitable. So that's about Reliance possibility in this particular field. But immediately what has happened is that this is a 2.5 lakh crore company,
They get a large part of the sales from diesel as well.
2,500 crore liter is being pumped every year. There are 10,000 crores liters totally pumped. Of that, 2,500 crores is by HPCL. So if you give 2 rupees per liter, which is bare minimum required to keep the shop open, we're talking about 5,000 crores profit. Even if you pay 30% tax to government, you'll make about 3,000-4,000 crores profit. Okay.
So the earnings pool would be very large.
Very large. It is the largest business in India, and they don't have any risk of. See, they buy crude on your behalf, so they are not concerned about whether crude is 80 or 90 or 100 or 50. they are concerned with their 2 rupees, this thing. So right now in this unsettled environment, there is inventory loss and all. I think there is a little confusion. But once this thing is settled, then I think this stock could be held above 5-6 P multiple, very large, and competition of course building up, but these guys are also not bad. And mind you, this time they're totally unconstrained. I mean, I hope this government has unconstrained.
At least that's the feeler.
That's the filler. So they will allow these guys also to compete with private sector, whosoever comes in, whether Shell comes or SR comes or Reliance comes. These guys will be there to compete.
So scale is here and the reach is
so
here.
Now let's
distribution
start.
is strong. Yes.
Quality. Quality of business is fantastic. Quality of management, you can question whether they're really been fully this thing. So I would say 50-50. Growth is there because now at half the price, they used to grow about 8-10%, now they'll grow at about 10-12%. Longevity, I don't see alternative to petrol, diesel and this thing. So I think we are talking about large wealth to be created. So I think this company can make 25-30,000 crores total profit in next 6-7 years. And the stock is about 15-16,000 crores.
And price is on your side.
Yeah. So price is clearly taking care of the management, little bit of issue. But I mean, and the fear, see one of the things is that what is reflected in the price is the hatred of everybody. Nobody likes it. So is the price.
It is not popular.
Yeah, it's not popular.
Okay. HDFC Bank, I'll skip the first 4 parts. Size is there, quality of management is there, growth is there, but price.
So HDFC is expensive.
HDFC Bank.
Yeah, HDFC Bank is okay.
3.5 times book, 4 times book.
Yeah, but P multiple is only 21, 22.
That's the right way to look at a bank. Don't look at price to book, look at price to.
No, you must look at price to book also, but price to book doesn't reflect the longevity of growth. This is not a growth ratio. You have to look at growth parameters, and growth ratio is best picked up by P multiple, not so much by price to book.
Give me 3 areas, sectors or sub-sectors where you're confident of double-digit growth for next 5 years.
I think, say mortgages, that will definitely grow at double digit. Your lot of, say automotive will be very interesting, particularly car will be very good. Your trucks will, in a cycle, it will grow at very rapid, like you're seeing the first few months, 25-30% growth. So India is a growth story. I mean, you'll find niches where, like say your iShare is growing at some, I think last year they did 2 lakhs, this year they have done 3.5 lakhs and they are talking about 4.5 lakhs. So they are growing 35-40%. So you have to go to the spots of quality and growth. QNG. You have to keep spotting.
You know, the minute we informed our viewers that we would be discussing a show like this, a question came on Twitter. And the question was, how do you define right? Your investment mantra is buy right and sit tight.
Yes.
So what is the definition of right?
Yeah, so right is great business run by great management. So what happens is, then average business and extraordinary business. If extraordinary business is not 2 or 3 times better than average business, they are exponential. Like Nestle or Hindustan Lever, just the business part of it is not a 5 times better business than ordinary business. They are like 100 times better business. So when a great business meets, the same is the story with the management. Average management, extraordinary management. Average management, extraordinary management is not 2 or 3x of this thing. Actually, great managements are 100x to the average management.
So focus on the management, that has to be the number 1 filter.
No, first is a great business run by great management. It is exponential.
That's the ultimate combination.
Terrific combination.
Something
and
like no finance.
Yeah. So we can keep discussing stocks. There are so many stories, stories after stories. But I think it is interesting time in terms of finding growth and pushing growth into your portfolio.
Okay, so mortgages is one, passenger car is the other one. Anything else
that
you're confident
You can see all the...
Okay, so I'm going to wrap up the show with one dark horse, and I'm curious because it is the odd one out. That's Ajanta Pharma, 7% of your holding. Let's run the matrix again here.
The same thing. I mean, this company is known to everybody. They are into domestic branded generics as well as exports to unregulated market, non-regulated markets. Now they'll go to regulated market. They've grown fantastic. You can go see their numbers, and guys are good. I mean, business is good, management is good, growth is there. When I bought it, it was reasonably priced. Today it is a little expensive, but I think still a good value.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.